Welcome to Talk Tickers. Today, we're breaking down what has to be one of the most interesting earnings calls of the quarter, Photronics. We're going to get into the numbers and, more importantly, the absolutely insane market reaction that came right after. So, let's get right to it, because this is the big question, right? How on earth does a 3% year-over-year revenue dip lead to a 45% surge in the stock price? I mean, on the surface, that makes no sense. The numbers look fine, but they're not going to blow your socks off. So what did the market see that caused it to completely re-rate this company overnight? Well, as always, the devil's in the details.
All right, first things first, let's check out the scorecard. How did Photronics actually do compared to what Wall Street was expecting?
And wow, they delivered. A clean sweep across the board. EPS came in at 60 cents. The street was only looking for 47. That's a huge 28% beat. And revenue? $216 million, a good 5% above consensus. So yeah, a really strong quarter for sure. But, and this is the important part, numbers like these do not justify a 45% pop in the stock. Something else is going on here. This is the market waking up and realizing the fundamental story for Photronics has completely changed.
So to really get what's happening, you have to look inside the numbers, at the revenue mix. Just a quick refresher, Photronics makes what are called photomasks. Think of them as super complex, high-tech stencils used to make computer chips and flat panel displays. So their business is split into two parts, IC for integrated circuits and FPD for the displays. And believe me, the real fireworks are happening inside that bigger IC segment.
Yeah, because behind that nice little earnings beat, there's this massive shift happening under the surface. And it's a shift that is totally rewriting the future for this company.
You know, it's really a tale of two different markets inside one company. On one hand, you've got the mainstream chip market. It's kind of soft, especially in China. But on the other hand, their high-end business is just absolutely on fire. We're talking record revenue for their most advanced photomasks, and it's all being driven by the insatiable demand from AI and data centers. This high-margin stuff is so strong, it's completely papering over the weakness on the other side of the house.
And management wasn't shy about this at all. The CEO basically came out and said, look, the big story this quarter was our record performance in high-end ICs. I mean, this advanced part of the business now makes up 42% of their total IC revenue. It's not a sideshow anymore, it is the new growth engine for Photronics.
And get this, they're not just sitting back and enjoying the ride. They are pressing their advantage, hard. They're pouring money into expanding their facility in Allen, Texas. That's a direct play on reshoring. They're also boosting capacity in Korea, and their brand new, top-of-the-line multi-beam rider out in Boise, it's officially up and running at full steam, cranking out masks for the most cutting-edge chips in the world.
Which brings us to the really crucial number, $330 million. That's their planned CapEx for 2026. Let me be clear, this isn't just for keeping the lights on. This is a massive strategic bet that says we are going to be a critical part of the AI supply chain, and we're putting our money where our mouth is.
It's actually kind of funny. On the call, management called this a measured step up. But Wall Street, they heard that, they saw the numbers, and they saw a seismic shift happening. And their reaction was, well, let's just say it was the opposite of measured. The stock closed the day up more than 45%. Just think about that. A monumental one-day move that completely repriced the entire company around this new, powerful AI story.
And you can see the conviction right there in the trading volume. It absolutely exploded. We're talking over 15 million shares traded hands. That's about 10 times the normal daily average. This wasn't just a few hedge funds getting excited. This was the entire market piling in, all at once.
And if you want more proof, just look at the options market. It went completely haywire. Call option volume, that's the bullish bets, surged over 1,300%. 1,300. That's the smart money making huge, leveraged bets that this stock has a lot more room to run.
Okay, so that's the story of what just happened. The stock had a monster run. The big question now is, what's next? Where does Photronics go from here? Let's break down the bull and bear cases and figure out our call on the stock.
All right, the bull case is pretty straightforward, and it is compelling. First, you've got these massive long-term tailwinds from AI and US reshoring. Second, they are building out the exact capacity needed to capture that demand. And third, they've got a rock-solid balance sheet. We're talking over $500 million in cash and basically zero debt to pay for all this growth. It's a pretty clean story.
But you always have to look at the other side of the coin. The risks here are real. I mean, trying to execute a $330 million investment plan perfectly is no small feat. Plus, we all know the semi-industry is super cyclical. What happens if there's a downturn and all that new capacity just sits there? And let's not forget that mainstream business in China is still a drag on the numbers.
So, this all brings us to our core thesis. Here it is. The market has stopped looking at Photronics as just another boring, cyclical parts supplier. It's now seeing the company for what it's becoming, a strategic piece of the AI and reshoring puzzle. That huge jump in the stock, that's the market betting that this shift towards high-end products is going to unlock incredible earnings power, even if overall revenue doesn't grow that fast.
And you know what? We think that re-rating is justified. The company is making a brilliant pivot right into the sweet spot of the semiconductor industry, the most profitable, fastest-growing part. Yes, there's execution risk. There always is. But the strategy itself is crystal clear and incredibly powerful. That's why we're initiating with an outperform rating.
And as always, please remember, this is not financial advice.